Wednesday, February 21st, 2018, Monaco 64, home of alternative economics and contrarian views. I'm going to look at the markets this morning and look at how the Far East has kind of helped the dollar rebound temporarily. And why do I mean the Far East? Well, first of all, the yen has dropped. So that's helped the dollar, and it's hurt gold. I've talked many times in the past of how there seems to be a really tight relationship since 2013 between dollar yen and dollar gold. Whenever the yen drops or the dollar rises against the yen, we see quite a bit of pressure on gold. And the other point is that it's been a Chinese holiday since, well, the Chinese New Year was last Friday, the 16th, and it's been a whole week of holidays since Saturday until today. So the whole of the Chinese markets are closed until today. They reopen tomorrow. And there's a theory in the last few years that when we have the Chinese New Year week when they're closed, that the guys from the Bank for International Settlements can come in and do whatever they want to gold. And if you see on Friday, Chinese New Year's Day, gold was doing very well until 1 p.m. 1:30 p.m. New York, closed above 1350 on COMEX, and in the after hours it just dumped to 1344. And then on Monday, with the U.S. closed, gold stayed fairly firm. Then the U.S. came in. BIS got the instructions on Tuesday from the Fed, probably, or JP Morgan, whoever. And gold dropped, proceeded to drop $20. And today it continues to drop. Frustrating, but do you really want to give up your gold for banker trash paper? I don't. Gold and silver are real monetary assets. You can hold them in your hand. Cryptocurrencies, I don't think, will ever replace that quality of being able to hold something in your hands, being really safe. We have a huge counterparty between our personal, physical selves and the asset, which is the internet. So I still remain adamant that it's the safest way to insure yourself monetarily versus bankster, how can I say, bankster dishonesty. In the past, have bankers ever been honest? Yeah, I guess so, when they used to respect the rules. But fractional reserve is part of their game, and that's dishonest. Fractional reserve is basically saying that you've got something and that you don't really have, which in my book is lying. But anyway, it's 7:45 a.m., so it's a bit early, and that's why Billy is not here. He likes to sleep in, and I don't like to wake him up. If he's up, he'll come and sit down there and be in the videos, but he's all right anyway. So what are the markets doing this morning? Well, as I said earlier, gold and silver continue under pressure. Yesterday we saw the Dow as well. I want to talk about that. I think it dropped about 230 or 225 points. I'm not too sure. And I want to look at the technicals of the Dow, the dollar yen, and also gold. So right now it's 7:47 a.m. London time. Spot gold 1326, down another $3. The range has been 1325.50 to 1331. Silver is at 1640, down 4 cents. Range has been 1638.50 to 1650. The Dow is up 13 points, so nothing really happening in the stock market there. It's at 24,970. S&P up 2 points, 27.17. The NASDAQ is up a little bit, up a third of a percent, up 25 at 68.02. Currencies. Pound is a little weaker, is at 139.80, down a tenth of a percent. Euro is down just over a tenth at 123.20. And the dollar is stronger against the yen significantly. It's up almost 0.5% at 107.80. And I'm gonna look at this dollar yen chart in a minute. What else is going on? I noticed that the bond market yesterday, the yield in the 10-year rose above 290. I think there was a lot of supply in the Treasury auctions. Bills, I think it was something like $250 billion in supply. People were concerned about that, but you know, they can always manipulate those auctions. They can bash gold, which is the anti-dollar, the day they need to borrow that much money. And they're borrowing that money, a lot of it is new debt, and a lot of it is new debt also to service old debt. So it never ends. And that's the other point about this system, how unsustainable it is and mathematically impossible to keep it going unless you get some crisis like we get in the past where they deflate the money supply. And why do I say deflate the money supply? Well, because in the fiat money system, the only way for the system to keep growing is for new debt to come along, and you can never pay off the debt. Well, you could, but then you would implode all the economies, because in a fiat money system, the asset side of the national debt is money, which is what we use to interact in the economy. So if you destroy debt or you pay it off, it's bad for the economy, bad for politicians, bad for bankers. Maybe not so bad for the public. Interesting that towards the end of the Clinton administration, you know, it was forecasted, even I think George Bush Jr., that you know, deficits were becoming surpluses. You can argue about that, and that in a few years' time they'd be able to pay the national debt. And I was thinking at the time that that's not going to be good, because that means there won't be any money in circulation if they pay off the debt. But lo and behold, we got a crisis in September 11th, 2001. I think you remember that one. The false flags of false flags, and you know, the printing presses and the government debt since then have exploded. So that crisis was used to good effect. You never waste a good crisis. That was Rahm Emanuel, who worked for Barack Obama, and I think is now mayor of Chicago. The chart I told you about. Well, let's look at the Dow chart, because I've been talking about how I think the high from the 26th of Jan will be the high for a long time to come, 26,616.34. We had a big drop earlier this month. We got down to 23,360.29, and I've looked at this move, and I've done a simple Fibonacci retracement analysis. And as I've said before, that's 61.8. That's the golden mean. Last Friday, oh sorry, not Friday, but yeah, Friday. The let's see, when was it? This is the daily. So on the 16th. Yeah, sorry, I've got confused because on Monday the markets didn't trade, and I was thinking, well, where's the Monday? But it was a holiday in the U.S. So on Friday we closed at 25,219, which was below the 25,373, which is this 61.8 retracement. Intraday on Friday we did go above that level, but we closed below it. And yesterday, the first trading day of the week for the US, market didn't do very well. We closed over 200 points and we closed at 24,964, which is even below the 50% retracement, which is 24,989. So I think that yeah, the level around 25,373 will be very important resistance. Will we try to go back there and retest it? It's not looking very good, is it, that chart? I think we could be in for, you know, a major drop in the retest of that low at 23,360, which was on the 9th of February, earlier this month. What about the dollar yen? Well, that's halted gold's rise, hasn't it? I mean, up until Friday, we saw the dollar make a new low down to 105.54 against the yen, and magically the dollar has rebounded these last 3 days. I'm sure the Bank of Japan, which is a minion bank for the Federal Reserve and JP Morgan and the US Treasury. After all, the US is still occupying Japan militarily. You know, 73 years after the end of the war, they still seem to think they need to be there to control the Japanese. So I guess we know why. Japanese do the bidding of the money powers in New York. So now the dollar is rebounded a little bit, but in my opinion, that looks like just a little dead cat bounce. We could see a rise further in the dollar against the yen, maybe even up to the 50% retracement there, just below 109. See how we were breaking the 61.8 of the move we've seen since July. You know, that was from when we saw the top in gold at 1375. That's that July 2016 low in the dollar. That was when gold was doing really well, and then we saw the dollar rebound again, and you know, gold dropped. So that's why I'm looking at those retracements. The moving averages are moving quite nicely in favor of the yen. So we could see still a little bit of strength in the dollar, but I don't think it would be long-lived. Maybe another few days or another week, and then we'll turn back down, in my opinion. Oh, another interesting thing about the Japanese and, you know, how the Americans, you know, run Japan, you know, still there, is the Sony, the Japanese company, SONY. Some people say that it stands for Standard Oil of New York, which is Rockefeller. So interesting. What about gold? Let's have a look at the gold chart. Well, you know, off this system that I use here, the gold right now is just hovering around the 50-day moving average. Earlier this month, when we traded down to the low around 1307.06 in gold, we traded through that 50-day moving average. So maybe we're gonna hold here. Who knows? Or we could go a little lower. But the moving averages are starting to look very bullish. You know, the 50-day is starting to trade up quite steeply, and we're not getting away from it, which is quite positive. And the 200-day is below the 100-day, which is a good thing. It's the red line there below the black line. That's it for now. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. Also follow me on steemit.com and on Twitter. And I'll talk to you later. Bye.